and we are here to provide that over to you if you need that. Identify the documents that you'll need for a small business credit application. Again, do not hesitate to ask what type of documents. We'll go over at high level, but if you have questions, feel free to chat it in. So whether your business is starting out, think about it, from the ground up right now, which before, if we start 2020, a lot of people started out and said, I'm going to do this business. I have this business development plan. I'm going to kick it off. And then the COVID hit, right? And so a lot of people have had to reshift their thinking. Funds weren't there as well. We've seen it from the restaurant industry all the way up to production. And it's all about how you are aligning yourself on your credit and your documentation and what you have in place, right? It's just difficult as well to get personal credit. Well, we're here to help you with the aspect of business as well. So what is creditworthiness? So lenders consider several factors when assessing creditworthiness. Have you paid your financial obligations in full and on time? Has your spending been prudent and within your personal budget? Do your habits over time reflect financial responsibility? Again, whether or not you're kicking off your business or you've been in business for some time, different things can impact all of these questions when a lender is considering several factors. So it is up to you as that business owner to make sure your documents are in line, to make sure that you have that, as you know, financial analysts have suggested on the personal side, on the business side as well, have that nest egg, so to speak, right? The 3 to 6 months so that your orders can get paid out, so that your employees can get paid, so that your invoices and all of that. Do you have stable personal income and or business revenue to pay all of your financial obligations? In many aspects from this time and even pre-COVID, a lot of people have to use their personal income. What do you have? What is out there for you? Or is it that you're having to utilize your 401k, your personal savings as well? Sometimes that is the way that you kick off. And then very similar, I always mention this, like Shark Tank, you have that story where you have still been working and still have this business on the side until you can break free and then just concentrate only on your straight business, right? What deeds do you have? What have you paid off? Do you have a paid off home? Do you have a paid off car? What about equipment, right? So all of that goes hand in hand as to what lenders are looking at to be able to provide that loan over to you. And there's all sorts of ways that the financial institution can assist you, just like us here at BBVA, we can assist you. Has your business been in existence and generating revenue for a few years? We all know that businesses within the first 3 years have that in the red, so to speak, right? And the chances are that they will fail. So what have you put in place to avoid that, to generate that revenue for the years, right? So that you can cross over to a full existing, because every business owner, what do they want? They want to make that money and they want to be able to continue to generate their product and service out for everyone, right? To enjoy, right? Because they have that passion that they got into business for a reason, and they want to be able to provide that product or service out to you as the consumer. Do you have a history of follow-through, such as staying at a job or building your expertise? A lot of people don't realize, and I get this question asked quite a bit, are you taking into consideration my personal side? You know, what if I've had, as I've mentioned previously, a colorful credit, maybe a couple of dings, so to speak, on my report? How will that impact me? What if I have, you know, been skipping through different jobs? How will that impact me? It does impact you, and it will impact you. But as long as you have that story and everything in line, it could build a case, right? These are just questions for you to consider when you are gathering all your documents to come in to apply for that loan. Okay. So as we go through and take a look at what it is that the lenders are considering, they're considering the 5 C's of credit. And along with on the personal side, there is on the business side as well, capacity, your personal ability and your business's ability to repay the loan currently and in the future. Any loan is a risk. Any loan, that lender is taking that risk on and taking a chance on you. So you got to make sure that you have that available credit out there. And that is what capacity is. Rule of thumb, 50% and below is what you owe, or 30% will put you into that next level. A lot of people, though, still pay off that debt. They have that credit line, that bill comes in, they pay it off. That increases that capacity, right? So that credit report, as fluid as it is, it can definitely assist you. So having that capacity there, so just a rule of thumb, if you have that $1,000 available credit, 30%, you only owe $300 or below, right? That capital, the funds that you have personally invested in your business. What is it that you have invested in? Whether it's liquid cash, whether it's a 401k that you've had to maybe do a loan against, or not even, you've had that nest egg there, right? Including profits that you have been retained in the business. So what invoices do you have for next upcoming services? All of that helps the ability to get that loan. Collateral, any personal or business asset that the lender can take in case you cannot pay that debt. So that's equipment, that's paid off equipment, paid off deed, paid off what is yours, and that definitely can increase the look of the application. Character, yes, your personal and professional history on delivering on commitments. So have you paid through? Believe it or not, the Better Business Bureau is a big one on this, because are you coming through on your service and your need in a good way, right? Are you building a fence but not using the correct material to withstand the fence, right? Or are you not there on time to deliver on your promise of what your mission and your vision? All of that, the consumer can come back on the Better Business Bureau side and write reviews. And you definitely want to make sure that the aspect of character, is it a definite yes or no on it? No, but you always want to make sure, painting the picture, it's this 5 C's, it's all together, right? And one of these is character, and I strive on this as well, is that sharing that it is important. Conditions, the purpose of the loan and also the financial prospects in your industry, the economy, and any external factors that may affect your business. So what have you set in plan, so to speak, right? So if you have that business plan, what do you have out there that will ensure that your product and your service is being requested, invoices, and so forth and so on. So the 5 C's is very important, and it definitely is something that the lenders take a look at and analyze, just as the same way as on the personal side. There is a review, so to speak, right? We have a simple case study, but regardless of the dollar amount, the case study behind it, relate it to your business, right? Anybody can have, their, startup business, or they've been in business for many, many years. Anything can impact what your profit and loss or budget could look like, right? So let's take a look at this case study right here with So Right, the company. Jovina is a 46-year-old entrepreneur who wants to expand her small sewing business. She started the business as a hobby, which a lot of people, that's how you start out, right? And it just goes from there. And selling to friends and family, and now, of course, the need is there. So 2 years ago, her daughter made a website for the business, which who doesn't have that, right? We have Etsy, we have social media, word of mouth, all of that. Now social media have those internal Facebook websites where, you know, you belong to and they're asking for businesses. So this is definitely sounds right up the case of this example with Jovina. She was able to start paying off her personal loans from the income, which is a great thing. That's what you want to see. And she has 3 credit cards, 1 business and 2 personal. She pays her credit cards and her personal loans on time, and she always pays more than the minimum balance. But she has never paid off any debt in full. Okay, so again, talking about one of those fees, we're going to take a look at as to how it impacts this situation here, right? So she owns a car that she's had for 8 years and rents an apartment and hasn't had any employment since having children 15 years ago. So she hasn't worked in quite some time. So considering the credit card history, which C or Cs will the credit card history affect when a lender is considering whether or not to give her a loan. So you definitely want to take into consideration the capacity and, of course, the character. So how you were paying it, are you paying it on time, and the capacity. Are you paying it off? And if you noticed on the details previously, it stated that she wasn't able to fully pay off the loans, right? She's paying them on time, but that capacity can impact her. The capacity impacts the debt to income, so therefore, is it too much of a risk? Is she able to manage? Is she just living off that credit card and not being able to have that full income coming in to withstand not using that line of credit? Lines of credits are great. That's what they're there for. But are you able to manage the invoices coming in to utilize it as an income stream and not just pretty much, as I mentioned, or everybody knows, paying Peter to pay, you know, Rob, Paul, so to speak. So consider the number of assets that she owns, which C's. Well, the collateral ownership affects when a lender is considering whether or not to give her a loan. Yes, she does have that collateral, but if you notice in the situation when reviewing, what the lender is going to take a look at is that the collateral is a depreciated collateral. Yes, she owns it, but how much against it can she get, right? A vehicle depreciates extremely, and it could impact her, right? She's wanting this set of income, this set amount loaned against it, but the value of it is not up to par. Mileage can take into consideration, type of vehicle, all of that, right? The wear and tear of it. So yes, it's a good thing. It's a positive that she owns that vehicle, but she doesn't have the value maybe withstanding behind it. What other equipment does she have, right? Is there a special sewing equipment that could be, you know, state of the art that she had to really invest her money in and she owns outright? That's where you go into equipment and so forth and so on. So if you're relating it to your business, what type of equipment do you have that could benefit you, right? How might the employment history affect her creditworthiness? Well, she hasn't worked for 15 years. This is her only stream of income. It could impact, right? What did she do prior? How is she handling all her personal versus her business debt? And how might her personal loan debt affect her creditworthiness? It definitely, in this situation, it definitely can. Good thing is that she has that stream of invoices possibly, or the tailoring, or clients that come in, but how does her personal side? Remember, on the capacity side with the credit cards, she wasn't paying off fully her credit card. So how will that impact her? Well, rule of thumb, 30% makes that credit score increase. So if she is living off of the credit card, 80% of it, it could impact her in a negative way, right? So other considerations by lenders, so they look at your background, general questions. General questions could just be, you know, how long have you been doing this? What type of invoices, business operations would come from there. Management and employee questions. Do you, at your moment in time of your business, have it to withstand management, right? Do you have a manager or employees? Do you have employees? Are they full-time? Are they part-time? Are you paying benefits? What does that look like? all of that can go into the considerations that the lender is taking a look at, right, to review that application. So the business operations questions would look a little bit like, what are you planning on growing? If you have a storefront, are you going to build another storefront? Do you have that capability to, how does your profit and loss look to franchise out, so forth and so on. So financial questions would be for yourself. And on the business aspect, how are the invoices coming in? Do you have contracts that withhold? If you're sewing and you have, a big contract that comes in each year that could definitely pay upfront your other, invoices out, then it could benefit you. Personal questions could be, how long have you been in business? Your previous job, why did you get into this? What is your succession plan if you're not able to withstand working? Who is going to back you up, right? That also falls under the line of management and employee questions. So all things that the lenders take into consideration when reviewing that business. And so think about it, how it's impacted right now. Those businesses that really kicked off at the beginning of the year, really, eager, and definitely we have that dip of the pandemic and unprecedented time, right? So a question that's always come up is the aspect of business and personal credit scores. And with that being said, it definitely is something that it is similar, but isn't. It's very unique in that it's a different type of credit scoring system, but it is reported in a similar manner. So Dun & Bradstreet, the DMB, has a scoring system that comes in, the Experian Business and Equifax Business. So whereas the personal score you would see from 300 to 850, maybe 900, the maximum scoring for the business side is 300. And so the FICO Small Business Scoring Services, you would pull from your personal and business, and it creates that number for you, right? Both business and personal credit scores are used to decide if a business or person is worthy of the loan and will repay the loan. Same aspect, right? It's a risk. When that lender is taking a look at the overall picture, how much of a risk is it, and what is withstanding the documentation behind to be able to provide that loan over to you. So how are they different? Where they draw from, which the score and the score ranges, they're different. So the Dun & Bradstreet, Experian, Equifax is a different reporting system compared to the personal side as well. You want to make sure that you're reporting who you're doing business with. If you've gotten a loan equipment or something, that they are reporting to that business so that you retain that business credit score. Because if you are in business, you have that lending with that equipment, and they're not reporting, then it's almost like a little mom and pop shop on the personal side, right? Where you go and get furniture and you pay it outright. You've paid good, you've paid it on time, but it's not reporting to one of the said business reporting agencies, so therefore it's not creating an accurate number for you. So businesses and organization information, you want to make sure that it is filing and it is accurately providing you that support in creating that number. You want to have that credit history about the assets. So if you have the assets in hand, paying it on time and utilizing it, you want to make sure that it's there. So additional business ownership. So are you a business owner elsewhere? Are you are you a partner with this business, and then you're an owner with your own business? So all of that is reported, and then you have that commercial credit score. Again, I cannot state enough is that if you are doing business and paying, you want to make sure that it is filed correctly so that credit score is generated, right? And potential risk for failure. What have you in place in the event something were to happen? so that you can make sure that you are backed, right? So steps to good credit. So building good credit, you want to make sure that you pay bills in full and on time. You want to keep credit card balances low. Remember that capacity aspect of it. You want to make sure that you're at 50% down to 30%. You want to ensure that your financial statements for the last 3 years record healthy financial behavior. That I get this question asked a lot on businesses. If I'm wanting to apply for a business loan, how long do I need to show? You need to show financial statements on the personal and business side for 3 years, right? You want to make sure that you have that. And if you're not in business for 3 years, where do I go? We have the means in the next couple of slides and the support on what you can do. Maintaining good credit, just the same as, you run your budget for your personal side, you got to run your budget on the business side as well. So you want to make sure that you are receiving a data universal numbering system, and this number system, small business organization, administration can assist you with filing that if you don't know where to go, or if you want to look up support. It's in the next couple of slides. You want to make sure you subscribe to a credit reporting service and ensure information is accurate and up to date. Just the same as with the personal, you want to make sure if it's not you putting someone else in charge, the accounting department, so to speak, the CFO, who is that in your organization? If it's you or your company, then you want to make sure that you subscribe to that. The same way as on the personal side is on the business side. So when you borrow from lenders who report to the credit bureaus, you have that ability to create that consistent credit score, right? So you establish trade lines with vendors and encourage them to report your good credit behavior back to the credit bureaus. So you have that ability to do that. When you are dealing with vendors, ask them, how are you reporting this? If I'm paying you and I'm paying you on time, then how are you reporting this back, right? Sure, chats are coming in. Okay, so what does the business loan application look like? Well, here is a checklist that is listed out for you. You have your business credit application. You want to make sure that you have all this. If you don't have a financial institution, then you won't have this business credit application. You'll be using the financial institutions one, right? You have your personal credit report. There's many means where you can pull your personal credit report, annually, free. Of course, a small charge if you want to get your FICO score, personal tax returns and business tax returns. As it has been stated, it is a very good habit to get into to separate it. Not a lot of people do that, and it surprises me. I know it could be taxing that you're dealing with this account or in this account, but keeping it separate allows your taxes to run smoothly, and then of course the business loan application, you can see things, how are they running, right? Business financial statements and personal financial information. Remember, I mentioned 3 years is a good rule of thumb to have on hand. Collateral information, so any deeds, any equipment, anything that you have there, so that you can have it ready to show, and the value of it as well. Sales contracts and purchase orders. What do you have in line for the upcoming year to keep your revenue going, right? Business lease or loan agreements. So anything else that you have loaned out, so that you can paint the picture to that lender. Hey, this is what I have, and this is what I have loaned out, so that maybe a DTI can have that conversation can be had right prior to the application. Business license, you want to make sure you have that up to date, everything's good. And this is even more so if you are having multiple, right? If it's you and your partner, are y'all applying? So it would relate to both of you. Disclosures if you own other businesses or your business has partners as well, and your business plan. A plus but not required. Business plans are always good to know the what ifs, right? Who is the succession? What happens? What do you plan on doing if you increase in revenue? Are you planning on building 2 storefronts? What would that look like? Employees, what would that look like? Or who do you have on part-time or full-time? So always your mission and vision as well. Your story, what do you have behind that? Again, not a requirement, but always a plus. Going in and talking to a lender to express, hey, this is what I have, and this is the plan that I have in place, and these are the supporting documentations, really helps out, right? So if you have gone through, sat down, and you go through the application, and unfortunately there isn't an ability to get approval, is that the end all be all? No, there is SBA financing, and it looks a little different than what the banking does, but it's there, right? If we can't approve you, then there's other means. So is a loan from a bank, and SBA guarantees a portion of the loan? Yes, it is a government funded loan, and it is there to assist you if the loan from a bank is not approved, right? It includes mentorship from SBA and help for borrowers to qualify. So always a good thing because you have that guidance. If you're starting out, you're not able to get approved through the bank, where do I go? That's a big question that gets asked as well. What does that look like? Well, it has mentorship, filling out applications, the business plan, all of that is there for you, and they're there for you. It enables borrowers to obtain loans up to $5 million, and it would look like the following. So SBA Loan Products, and I will say that BBVA is a preferred SBA lender. So if at the time the loan is not approved through a financial institution, you go through this SBA program, and it could end up back to BBVA, right? And so what it would look like is a maximum loan available up to $5 million. There's a fully amortizing government guaranteed loan, and loans are offered for working capital, expansion, equipment, and where from you is about 10% down by the borrower, and then 90% bank loans. So there are some stipulations that you would have to go through. 10% down, if you're looking into borrowing a certain amount, you would have to make sure that you have that there, right? So 504 loan program and the SBA Express Veterans Program, as you see here, there's different programs available, and there's different stipulations. With the 504 loan program, it's 10% down and 40% CDC and 50% bank loans. So there's different stipulations there, and those are loans offered for owner-occupied real estate, construction, and heavy equipment. So you're looking at the opportunity to get up to the $5 million, but again, it's a loan that could require certain stipulations. Then, of course, we have the veteran, there is a veteran program and express loan. So maximum of $350,000, and some guarantee fees are waived, so which is a good thing. It is a line of credit or a fully amortizing loan with a partial government guarantee. So it has the perks for you to be able to apply for this loan and go through the SBA program. Again, with the SBA, you get that mentorship, you get the assistance with applying for the loan and the ability to gather all that documentation, right? And So alternative sources of funding. So there are nonprofits out there that want to provide funding for you. They're called community development financial institutions. If the funding is not there from a financial institution, what does it look like? Well, it's a nonprofit. They're there to work with the communities to provide business mentoring, financing, and technical assistance. You would just pretty much Google community development financial institutions, and they're nonprofits that have this funding that want to loan out, and they're for borrowers who may not qualify for traditional loans. And many lenders have special programs for business owned. What I like about it is that they're very specific, right? They're for Native Americans, they're for women owned businesses, minority groups, and people who are economically disadvantaged. So there's different sources out there for funding. So as it, in summary, as I mentioned, remember that creditworthiness for small businesses is measured using the 5 C's. A lot of people ask, hey, are you going to consider my personal? Yes, the personal credit is looked at on the business side as well. Remember character, capacity, capital, and collateral and conditions. The 5 C's, if you live by that, then it definitely is a good way to manage your credit and manage your business, right? If you're running a new or small business, it's likely your business won't have much of a credit history, so lenders will rely on business owners' personal credit report and score when deciding whether or not to approve loans to your business. So all in all, rule of thumb is keeping your personal credit as well in line will assist you with your business side. If you have always get asked as well, what if I have a slow pay or something happened? Am I out of the dark, so to speak? Yes, it'll take a while to maybe pay off that, or maybe you need a cosigner, maybe you need a collateral to put down, but the opportunity is there, right? And in order to apply for a small business credit, you may require a variety of legal and financial documentation. So rule of thumb, always make sure that your documentation is kept up. The listing of documentation as well. Remember, rule of thumb is 3 years. You want to keep 3 years of financial documentation up to date, your taxes, your statements, personal and business, and just keep it in a nice area, and you can gather everything when applying for the loan with that financial lender. So as I wrap up, remember that BBVA is here for all your business solutions, needs, and on the personal side. And we have many locations, especially the one in the Galveston area, that they're there to assist you and provide you with solutions. And I know the PPP loan has possibly run out, but there's other lending out there for you. And you can definitely reach out to the BBVA in the Galveston area to start the application. We're here for you. So Lorraine, that ends and concludes my section of the presentation. Didn't know if there's a chat that came in.
I was on mute, but I haven't seen any more. So I think we're good.
Okay, great. Well, definitely want to provide y'all my information as well. Let's see, I believe there's a chat that just came in.
Can you hear me? There is a question that Alexis asked, but she didn't ask the question. All she said is, I have a question. If you'd like to unmute, Alexis, you can ask your question now. See if she's unmuted here. Let me look.
What number of businesses fail in the first year of opening? The percentage is high, unfortunately. They state that the first 3 years is, when I was a branch manager, that was the thing that definitely, has that first 3 years, first year, you're running in the red, right? So you want to make sure. So the percentage, I wish I had that, percentage out there for you. If anyone has that percentage, I'd love for you to chime in. I know that within the first 3 years is the critical aspect of it. It definitely is eye-opening as well that within that first year, it could be impact. So you want to make sure that you have that nest egg, so to speak. And next question is, what are the largest industries for entrepreneurs in Houston or Texas? Essentially, what is common from your perspective? Largest industries for entrepreneurs. So like what type of industries are out there? Okay, so, being in Houston, of course, you have, the supported of the oil and gas industry, and then, of course, in the Galveston area, I'm sure the marine industry as well. So it just depends on where you're at. The good thing is that we are in Houston, and we have the ability to have the means of being the fourth largest city to provide the opportunity. I don't know if Nee is on the phone, being that she's a business banker. Nee,
Hi.
are you there to chime in? Hi, Nee.
Hi, thank you. You did a great job. Thank you so much for inviting me.
Thank you. So Nee is with BBVA. She's one of our business banking officers. So Nee, if you happen to know, what number of businesses fail in the first year of opening with you working with businesses out there?
And that is very hard to nail down because it's based on the industry of the market as well. So prior to the COVID, pretty much a lot of industries that we categorize a little bit high risk. And one of them is oil and gas. And now with the COVID, everything is pretty much, we don't really entertain oil and gas industry. And some of my book of business, just like even the restaurant prior to the COVID, that did very well. So now they're under the list called the kind of high risk as well. Yeah. Because we don't know after COVID they're going to survive or not. And this, that doesn't mean they're 3 or 4 years. And also dental industry also categorized high risk now due to COVID. So a lot of things have changed because of what happened.
Yeah, and she's coming back. Alexis is coming back with another question as well. Are medical supply companies thriving at this time? What are you seeing out there with medical supply companies due to the fact that cleaning? I would even think cleaning. Now that we're opening back up, what is, cleaning services, the essential, getting that and she's even mentioning perhaps educational services as well. I would even say software technology. What are you seeing out there? What do you think, Nee, on your opinion?
Right now, because of COVID, I'm actually doing 2 deals on medical purchases. So yes, we're going to have a change on the lifestyle as well as a habit, as well as how we do business going forward until we found or get the vaccine. So, and then the economy stimulation. So yes, I've seen a lot right now going, if you're going to stay with the medical, any supply, as well as manufacturing, those are the stable.
Absolutely. She mentioned great perspective. Thank you so much. And it is true, Nee. I didn't even think about it with the dental aspect. We focused so much on dental, we as in BBVA had those, and now y'all are having to shift, or maybe the lending isn't there, right? The little bit of a restriction because of just, them not opening up as quick, or why is it? What do you think?
Well, majority of that, because of COVID, a lot of them are shut down, and a lot of them are not open, even though they have preparations to get the customer to come back. But the fear of uncertainty of the proximity of social distance, that doesn't mean that a lot of them go back. So those have hurt, and you have for the past 2 years, the dental district was booming, and they're great money in making pretty much every corner of the neighborhood. So now we're not sure what's the status of that, even though they're all affecting our clients. So and I have to.
And I agree with that perspective as well, because even myself, I have a child that has orthodontic, and her oral surgery got pushed. This was something that was supposed to be done spring break, and we still haven't done it. So therefore, it delays her orthodontic as well. So everything has been pushed back, and the only reason is because they can't put them under. They can't put that child under because of the COVID being closed, the openness, the blood, IV. And so it definitely is a perspective in that they're not getting the funds in to do this service. So yeah, thank you so much, Nee. Anything else you wanted to, any other insight you would like to add as we wrap up? First, you work in the Galveston area, right? Galveston Southeast area?
My branches I cover from South Houston, Pasadena, all the way to Galveston with Mary.
Yes, great. So
and I just
we will. Go ahead.
Oh, my wrap up is just please remember that this will pass. And I know that especially in the Houston market, our economy, regardless during the 2008 or now, we always been pretty strong. So it will pass, and hang in there, and we will come back. So don't worry about the lendings. We will take a look at all the cases, and we want to help our customers and small business go back to doing the business as usual.
Yeah, I love that. Thank you so much for that. We'll definitely get your information to share it along with Mary's from the branch, and then my information. Alexis, thank you so much for chiming in. Anyone else, if you have a chat, do not hesitate. Nee, thank you so much for your insight and wrapping us up. Lorraine, thank you so much for allowing BBVA, myself, to provide any insight over to y'all as a workshop. We can share this information and also provide additional information on what the branch is offering for small business owners, and the lending and the credit aspect, and on the personal side as well. So thank you, Lorraine.
And Arlene, I have recorded this session, so I will send you the link to do with it what you would like. And that way you'll have it. It's great information. Thank you so much.
Thank you. I'm going to stop sharing, and I just want to say thank y'all. Y'all have a great day.